It's Bucky again with Top Dollar Home Offer. We buy houses and we help homeowners that say, I need to sell my house fast. We are here to help. No matter what situation you're facing, we can help you. We've helped homeowners for the last 20 years. We've bought houses in different states, and we have been buying houses here in Tulsa, and we'd like to buy yours if you're interested in selling, or maybe just interested in finding out what the value of your home is worth. Our company is different because we actually tell you what your home is worth and could be worth, and show you exactly how we present our offers with our ARB program. It gives you 3 choices in order to make the best selection that fits your current needs. We have been talking about credit and credit repair. One of the key things that we talked about was how to efficiently dispute credit and how to go about that process. It takes quite a bit of time, but if you're consistent and you're following through those processes, we highlighted some of the key things that you want to follow. And from there, you want to understand the reasons how credit affects your credit score. So that's the video that we're going to talk about here. And we're using Google Sheets again because Google is awesome. And we like having the stuff easily shareable to you. So you can download any of these free resources from our website free of charge. So it doesn't matter if you're going to be buying a house or selling a house. We buy houses, and we often, do owner financing on properties too. So depending on what your situation is, we can help you and put you into our credit repair, and you can repair your credit and be off to owning your own property again. So let's jump into how a credit score is determined. Here are the highlights, and let's talk about the reasonings how those affect. So how is a credit score calculated, and how can I improve my credit score? So it would be very nice if all these bureaus use the same scoring system, but they don't. So there's TransUnion, Equifax, Experian, there's a FICO score. Everybody has a different thing. You got Credit Karma and all these other things out there that's applying a score to you. So when you go to your lender, you're like, oh, where am I going to hit, right? You think you know, but you have no idea. The best thing you can do is just know how you match up in these categories, right? So the first thing that you want to do is understand, why, right? And the mortgage companies, they use their own systems sometimes banks use their own proprietary systems, and then it goes through underwriting. They make determinations. But again, if you're trying to get a mortgage or home loan, 2 years with no latency, that's just kind of standard. I mean, they don't really deviate from that. So you can purchase a score, but if you do decide to purchase a score from a company, just do it for all 3 so you get the same representation and understanding of what that may be, right? So let's take a look a little deeper and understand how these categories marry up. So 35% of your score is affected by payment history, meaning how many late payments, collection, charge-off, bankruptcies, judgments, and liens are calculated to hurt your score. And it's all based upon time. The older the information is, the less it contributes. They have algorithms that they wrote that will look at things and measure and calculate. So everything that goes into your credit report is affected in the future. So just pay your bills on time, right? Have that monthly budget. If you have to have loans in agencies that are reporting on your credit report, then make sure you're paying those on time in order to stay current with your credit report. So it's usually the 2 most recent years that will hurt your scores the most. Like I mentioned, lenders will not lend on a house if you have a derogatory item within the last 2 years. So they don't want any 30-day late pays, anything. They can, they know people go through times, right? And setbacks, so they look at that. So for example, if there's a 5-year-old collection item, that just showed up 30 days late a month ago, that is bad. So you want to make sure you're deleting all those off your credit report and taking care of them as well. So what is credit utilization? 30% of your score is affected by the utilization of your credit. So it's better to have several accounts with low balance distributed among them than it is to have a few accounts maxed out near their credit limit. Okay. So the most simplest way to do that is you want to divide your current balance by your credit limit. So let's just say if you had a credit limit of 5,000, right? You had 4,500. Okay. Oh, that's 45,000. So you want to not utilize more than, say, 30% of that, right? So if you take and divide that, so you could just hit the good old sum calculator on Google Sheets, which is awesome. So you just take this number and you divide it by this number, and that's 90%, right? That's not good. That's no bueno. That's going to directly hurt your credit utilization score. You want to have this down to, say, 30% or less, right? So if you're looking at your credit cards, you want to get those paid off. So there's some quick tricks or tips or tricks, whatever you want to call them. You can actually say, hey, Mr. Vendor, I have reestablished my credit. I'm paying good. Can you raise my credit limit, right? So let's just say you raise that to 10,000, right? So maybe they approved you and increased your credit to 10,000. Check out that. Now you're at 45% utilization. So you just need to pay down a little bit more, maybe to 3,500 or 3,000, and that will get you down to 30%. Right. So keep in mind, if you have a bunch of little accounts, just make sure every account is at least under 30% utilization. So if you're in the process of wanting to raise your scores, you want to get all your accounts under 30% utilization, right? Paying them down or ask. So another 15% of your score is affected by your established, meaning don't delete any items that have been on your credit report for years. So if you have stuff that's been on there 20 years, don't delete those if they're in good standing, right? So you want to make sure that you have good items on your credit report for a long history. If you don't, another trick or tip, whatever you want to call it, is you can actually jump on authorized user. Lenders will understand that you're an authorized user, but the overall score will be increased, right? So if you jump on as an authorized user for somebody that's had a line of, say, 10,000, that's going to increase your credit score. Okay, so it's a quick way to reestablish your credit and jump in and have a history of a long-term credit report on your, or a company reporting on your credit report. So keep in mind, it's a great way to reestablish credit. So if you're trying to reestablish credit, maybe you can jump on as an authorized user or co-signer on another loan or another credit card. There's also ways that you can go from bank to bank to bank, putting up a deposit for a CD, borrowing against that money, going to another bank, borrowing against that, and then paying those off over the next 6 to 9 months. And that shows good credit with multiple lines of different types of loans as well. Okay. So another 10% is credit inquiries. These can add up. So they cost you about 3 to 5 points, and those are easily knocked off your credit report. So if something's older than 2 years, those you want to knock off real quick. Those are easy to dispute and get off. Than 2 years, and they're worth 3 to 5 points, maybe more. So if you have like 6 of them on there, you could raise your score maybe 30 points or 20 points or 25. We don't know how they calculate it for sure, but it's up to you to just try and see what happens. Okay. Dispute any old inquiries that are on there that's older than 2 years to the date. Okay. All right. So you've done that. Another way you can do is having a mixed use. So one thing that you can do is open up revolving installment accounts and mortgage accounts. So they recommend an average of 3 to 4 credit cards, not too many revolving accounts. So an installment loan and no more than 2 or 3 of those. So just be careful when you're trying to reestablish credit. You want to make sure you have a good mixed use. So meaning that, credit card, installment loans, just a good mix. So it shows that you can pay multiple different vendors, that you're good. You're good with debt, in other words. So all these factors affect your credit score. And if you get into any questions or details about what I should do or how I should do, just really go back here and just think about your payment history, how you're utilizing your credit. These are big swings to your credit report. So if you're getting ready to apply for a loan or a mortgage, you want to pay down those debts below 30%. Make sure your credit history is fine. Can't change that unless it's stuff that's old. And then start knocking off any hard acquires. That's a quick way to improve your credit score really fast. And just remember, the different bureaus have different scores, like Experian is Fair Isaac, Equifax is Beacon, TransUnion is America. So there's all types of different scoring methods out there. So just keep that in mind when you're looking at your credit score, and just give yourself some time. It takes a little bit of time, but you can get there. So remember, we buy houses Tulsa, and we'd love to help you with yours. If you're facing a crisis situation or you need to sell your house fast, give us a call. We're happy to help. We work with buyers and sellers, meaning that we buy a lot of different properties. We, have homeowners that say, I need to sell my house fast, and they give us a call. Give us a call at 918-212-5442. We're happy to help. Remember, Top Dollar Home Offer, we buy houses.